Well, good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today is Tuesday. It is the 16th of March. It is the second day of the second week of trading in March of 2021, and I still don't know how we got here. It seems like we're still back in the COVID period of March a year ago. It's like a black hole for me. Let's talk about global economy. I want to talk about one of the vaccines. There's trouble in the air. So I want to talk about it. Global stocks were higher, but there's a slower rollout of the COVID vaccine in Asia compared to US and Europe, which continues to put people in a cautionary mode, although South Korea, Japan, Taiwan, other nations have fewer deaths. Now, here is the big problem. I'm actually going to read this for you from here because I have more information. A growing number of European countries are temporarily halting the rollout of AstraZeneca vaccine after reports of a handful of cases of blood clots in people who have received the shot. The suspensions go against the advice of international medical agencies, which say there's no evidence that the vaccine is linked to clotting and the rollout should continue while the reports are being investigated. These concerns come at a pretty bad time for Europe as a third wave, a third wave of infections threatens to grip the continent. Meanwhile, in the US, experts say concerning variant is about to become dominant. So there is a variant of COVID that's about to become dominant, and the American Red Cross reports that about 1 in 5 blood donations from unvaccinated people have COVID antibodies, which is crazy, meaning these donors had likely been infected with the COVID at some point. So I just wanted to read that to you. I thought that was interesting and a little more information that's provided here. But be careful with this AstraZeneca, with this blood clot, and the fact that we are getting a dominant variant in the U.S. That is concerning. But can you imagine 1 in 5 people who didn't think they had COVID appear to have COVID antibodies in their blood in America? That's huge. That's mind-blowing, really. But wanted to give you that little thing. So if you're thinking of taking AstraZeneca, be careful. Blood clots, just throwing it out there. Investors have taken heart from President Biden's pledge to expand vaccine eligibility to all Americans by May 1st. A lot of people are counting on that, which should also translate into faster economic growth, especially in Asia. But Asia's bouncing back pretty good. Some economists, like me right here, fear that inflation, which has been dormant over the past decade, could accelerate under the extra demand generated by a surge in government spending. Others disagree, pointing out that there's 9.5 million fewer jobs in the American economy, but it is picking up than there were before the pandemic hit, and arguing that unemployment will keep a lid on inflation. Yeah, well, I hope somebody tells the 10-year note that, because the 10-year note is literally made a new low yesterday. Now, I was showing you this yesterday. This is the divergence. We're having a lower low on price and a higher low on the RSI. Notice the RSI, we're making a lower low, and the RSI can't even get past the 30 level. This is telling us that the bond market is grossly overbought. What does that mean, really? All it means is that we may have a pattern like something like this, where it just kind of goes sideways for a while. Because let me show you this. A sideways cycle can alleviate stress on the RSI, on the oscillator. So it doesn't necessarily mean, it probably means, based on the price action we've been seeing, it probably means we'll probably rally up to this level, to the 145 from the 135 level. But let me be very frank with you. I'm not seeing a lot of relief here because I would have expected this bounce right here to have gotten higher and at least hit the 50-day moving average. And the fact that we haven't is just telling me that more likely than not, we may just see a little bounce and price hovering around the 1.5% interest rates. Remember, this is the bond market. Interest rates are inverse. So when I say lower bonds, I mean higher interest rates. So when I say bond market's not going to bounce or bounce high, that means interest rates are going to bounce a little lower. But most importantly, I think they're just going to kind of stay stagnant, because by the end of this year, we're at 1.5%, roughly, give or take, on the long bond. We're looking at 2 to 2.5%. And that's really what's causing this Nasdaq right here to be trading right at the 50-day moving average. Now, this is actually what I wanted to talk about next. It looks like we're at the 50-day moving average. Now, if you look at the rest of the indices, if you look at the Dow, for example, you got to see this. All-time highs. Now, this is going to undo itself. This is not going to continue moving higher. And when this undoes itself, who do you think is going to end up paying the price? Let me give you a clue. The Nasdaq. So right now, the rest of the indices, I want to kind of give you a play-by-play. They look like they're peaking out. And I don't mean peaking out permanently. I mean peaking out on this move here. I don't think this is going to go up parabolically, which means it's going to cool off. And that's going to put more pressure on the Nasdaq 100. So I'm very skeptical that the Nasdaq 100 is going to get too far above the 325 level, because there's no major catalysts out right now. So I think we're going to just kind of sit around here, maybe huff and puff, get some buy triggers in, because everybody on Wall Street, all the gurus out there are going to say that the Nasdaq is finally trading above the 50-day moving average. But I honestly think we're going to huff and puff and then come back down, because the bond market, as you've seen previously here, is just not ready to go higher. And there's a huge correlation between the bond market and the Nasdaq. And the only way the Nasdaq will really go up is if there's much less fear of interest rates going higher. And right now there isn't. Interest rates are going higher. It's just a matter of when. The long bond has spoken. If the Fed doesn't do anything with the short-term rate, it doesn't mean that the long-term bond can't go higher. That's a matter of supply and demand. So I want you guys to be cautious, and I want you to be cautious that the indexes right now are kind of mixed. The Dow's down 24, the S&P's only up 5. The only one that's really rallying pre-open is the Nasdaq, and we've already talked about the Nasdaq. Even the Russell's overbought. So I think the broad market's a little overbought, and the Nasdaq took it as high as it can go, and now it's ready to cool off again. So I'm not really bullish on the large cap tech. Now, we've got two big reports today. We've got retail sales, which makes up 2/3 of the GDP. And last time the number was, we saw a growth, a percent surge of 5.3, ex-autos 5.9. That was more than expected. Right now, we're not looking for a big surge. We're looking for a dump the other way. So if the number is positive, let's say retail sales is up 1% or 0.5%, that's better than the consensus. That can cause the market another leg up possibly. X vehicles, we're looking at not even, look at this, the expectations on the upside on growth is not even above 0.5%. So if we can get 0.5% or higher, we'll be on the upper end of the range. Same thing with X vehicles. If we can get above 0.8, we'll be on the upper end of the range. I'm thinking these consensus numbers are fairly accurate, but if retail sales doesn't give us a good showing, it's not going to be great for the market. And we also have industrial production, and we saw growth of 0.5% in industrial, and manufacturing output 0.6. That's the consensus. Last time we saw 0.9 and 1%. I'm hoping we can see a growth above these numbers. So again, for retail sales, we want to see anything better than -0.5, and X vehicles, we want to see anything better than -0.1. And for industrial production, and both of these are coming out within the next hour. Retail sales actually coming out in about 13 minutes. But industrial production, we're looking for anything that's better than 0.5, and manufacturing better than 0.6. I think we're going to meet these numbers on industrial production or beat them. Not so sure on retail sales. Now, I've got something big for you today. I'm looking at stocks outside of the large cap tech. Stocks that are showing me that economy is opening back up. And one of the stocks, and I think Adam Sarhan actually mentioned this during our talk yesterday. It hasn't made it on, till today it hasn't made it on my scene, but it looks just like Marriott. Marriott, Expedia, Trip.com, what is it called? Priceline. They changed their name, but Priceline. Even Rick, the nudie bar in Texas is don't ask, but I'm just telling you, people want to go back. Normality is screaming loud. We're having a major sector rotation. Hilton Grand Vacations, you guys know what Hilton does. Made a, let's see here, let's go to a 2-year chart. Look at this. Completely took out the price action before February. Love that. Made a swing high, multi-year swing high. Let's see here. Let's see, we haven't been here in 3 years, 2.5 years. So it's a multi-year high, made a swing high, made 3 days down, and now it's coming up nowhere near the 50-day moving average. Nothing like the Nasdaq, just completely bullish. I like the stock. I would put a buy around 41.20, and I would cover it right at the 38.60 level, and my profit target would be 2 times the difference added to my entry between, that's 2 times, I would take the difference between my entry and my stop loss, multiplied by 2 and added to my entry. Again, I would take my entry, which is like around 41.20, subtract my exit, which is right below this low right here, multiply that by 2, and add it to my entry. You can always rewatch this video. Now, my ticker symbol is HGV. I think the stock has a lot more upside. I've got another for you. Now, this is a little more controversial. The name of this company is Fiserv, F-I-S-V. The company's up about 20% in the year. But what does it do? It's a tech company. But let's look closer. What do they do? It's a Fortune 500 company, provides information management and service to financial and insurance companies. So it is a tech company, but it's really not a tech company. It's more of a tech company that's dealing in the financial space. And you know what I said about financials? Financials are leading right now. So this is a stock that may actually allow you to have your cake and eat it too, because it's a large cap tech company, but they're dealing specifically with the financial sector. And the financial sector is leading right now, especially with interest rates going higher. They're a leading provider. Service include transaction software, outsourcing, business process, outsourcing software system solutions. People are looking to go back to work. People are looking for employment numbers to pick up. We're looking for normality. Businesses opening up. People need financial software for businesses that are growing. So this is a real in-demand thing right now. So let's look at the chart and you will see how the stock is performing. The stock made a swing high, didn't even pull back too far. If we look back 5 years, you will see that the stock is currently at all-time highs. Now, I like this stock, and if you want to get in on the Nasdaq before it starts taking up, you've got a double whammy here because you've got a Nasdaq stock, right? Large cap Nasdaq stock, but it's in the financial sector. And if you look at the financial sector, let me show you this. Let me show you my filters. These are my 10 filters. If you look at the financials, which are right here, you will find out very quickly that they're second spot. They've gone up 10% over the last month. Over the last 3 months, 20%. So if you can combine a little tech with a lot of financial, you're in a good place. You may want to wait for a little pullback, a slight pullback, maybe to the 119, 117 level, but I do like this stock quite a bit. Again, ticker symbol FISV. So just so you know, not all Nasdaq stocks are dogs, all right? And just so you know also, yeah, it is in the Nasdaq 100, but it's one of the few Nasdaq 100 stocks that I actually like. Let me take a quick look at the Nasdaq 100. I want to see what kind of stocks are leading in that sector right now. So you still got Baidu. So look at Expedia. Look at Trip. Look at Marriott. Look at Walgreens. You see, look at Priceline. Look at Ulta Beauty. All of these stocks are coming back. And that's where you want to be right now. Starbucks, Ross Stores, ADP, that's a data processing company. So again, you could clearly see that paychecks, that going back to normality is where you want to be right now. Now, before you go, I've got something not big, not massive, explosive that you need to be a part of. Folks, check this out. And I mean, listen to this. There's a formula that's helped Wall Street legend Chuck Hughes lock in a 96.3% win rate over 7 years. 96.3% win rate over 7 years. And it doesn't matter if the stock is going up, down, or sideways. Do I have your attention, especially in this market with the Nasdaq? And it's all over the place. 96.3% success rate, whether the stock goes up, down, or sideways. That's got me right there. It's his latest discovery, and it could allow the average trader to profit on stocks even when they're completely wrong about market direction. How would you like to be wrong about market direction and still make a profit? Who wouldn't want that? And you're completely hedged, and you don't need a big account. Man, I can't wait to talk about this later today. Now, and I mean now, Chuck is finally revealing to the world what he's found and how you can start using the strategy to pull potential profits today, right now. All you've got to do is click on the link below and learn how you can get your hands on Chuck's most recent trading discovery. 96.3% success rate over 7 years. No matter if the market goes up, down, or sideways. No nasty credit spreads and limited risk. And you could trade this with like a $700-800 account. Folks, enough said. You've got to check this out. And by the way, if you're watching on YouTube, subscribe to this channel. Be the first to watch when we post new videos. hit that link now, and I'll talk to you later. And don't forget, Chuck and I are going live today, 96.3% success rate. You cannot afford to miss out. Follow the link below, get in on it now, and have an amazing day. And I'll see you all at 1 p.m. Eastern Time. Bye.